Whoa.
Hey Dave, if you're all set up, we can kick things off with our webinar for today, Understanding Ether Futures. To walk us through the cryptocurrency landscape is Dave Lerman from CME Group. He is the Director for Education. If you're all set, I can hand over the reins to you. Dave?
Yes, I'm all set. Can you hear me?
Yes, I can.
Can you see my slides?
Yes, I can, Dave.
Okay, thank you very much, Sri. All right, on behalf of the CME Group and myself, I want to thank Phillip for allowing us, for hosting this webinar on Ether Futures. We're going to talk about the whole cryptocurrency landscape, as he mentioned. We'll talk about Ether a lot because that's the most recent launch. We just launched it yesterday, but we have to do a little review of Bitcoin and the overall cryptocurrency landscape before we really get going. So we had a pretty good launch yesterday. We traded, I think, over about 200 contracts, or at least the open interest is 200. So the first day's volume translated into open interest, most of it. So that's good. But let's go back and look a little bit about the history of our Bitcoin launch, how it's done, and just the overall cryptocurrency ecosystem as it continues to grow. Quick disclaimer, futures trading or swaps trading are suitable for all investors. Each involves the risk of loss. So as we always tell people in all time zones, do your homework. All right, so on the heels of a successful launch in December of 2017, the CME will introduce, actually they did introduce Ether futures on February 8th. That was yesterday. All right, average daily volume of Bitcoin futures in the fourth quarter of 2020 was nearly 10,000 contracts a day. The price action in cryptocurrencies is unprecedented as 2020 saw Bitcoin and other cryptos advance by triple digits. I think Bitcoin was up nearly 200%, if not over 200%. So several other cryptos were up by triple-digit amounts too. So you also saw unprecedented volatility. The volatility in Ether and in Bitcoin is triple digits, especially in Ether. It was about 145% last time I looked. So it's great that we have these tools for risk management because the crypto landscape, being so young, is very volatile. All right, before we get into things, we have to give a little bit of background here into the Bitcoin reference rate, the Ether dollar reference rate, and the real-time indexes and things like that. Because without an underlying cash market or a robust benchmark behind the futures, you're not going to get too far. If you understand stock index futures, whether it be Hang Seng futures or the E-mini S&P 500 futures or the Dow futures, one of the reasons why they're so liquid is because the underlying cash index, the underlying cash market is so incredibly robust. Lots of people calculate the S&P 500. The index provider S&P is the main calculator, but other people calculate it too, especially people that do index arbitrage or do any kind of quantitative strategies or rebalancing in their portfolio. So the S&P 500 has a very robust cash market that's transparent and can be calculated by just about anyone with a spreadsheet, basically, and a couple of other items that you can subscribe to. Well, we figured that if we were going to launch cryptocurrency futures like Bitcoin or Ether, we need a reference rate. We need an underlying cash market that's a robust calculation. So in 2016, a full year before we launched Bitcoin futures, we launched the Bitcoin reference rate. And it's a combination of CME Group and CF, which is crypto facility. So the CME CF Bitcoin reference rate came out in 2016, and it's just the reference rate. It takes a snapshot. It's like the London gold fixing in the morning at 10 o'clock in the morning Chicago time or 4 o'clock in the afternoon London time. You get a reference rate. They take a slice of 1 hour and they break it up into 5-minute intervals in the morning, and those 5-minute intervals are all averaged to come up with a reference rate. And the reference rate comes from some of the larger crypto exchanges out there, like Gemini or Coinbase or Bitfinex. 2017, we launched the Bitcoin futures in December. And then in 2018, we launched the Ether dollar reference rate, which is, again, like this London gold fixing, just like we did with Bitcoin at 10 o'clock in the morning Chicago time, 4 o'clock London time. You get this robust reference rate that's very easily, the methodology is available to anyone, and you can get that at our website. And then, of course, we launched Bitcoin options early in 2020, and Ether futures are here now. We launched them just yesterday. So having an underlying, robust, easily, what's the word I'm looking for? Transparent reference rate and a real-time index is it's important. You can't have a really liquid futures contract unless there's some reference or some real-time index that it tracks. Okay, so just a quick progress report here, just going back a few months. On January 2021, which is when Bitcoin advanced to new all-time highs above 20,000. Average daily volume was 16,900 contracts, which is equal to 84,588 equivalent Bitcoin. That's up 57% compared to January of the prior year. In the fourth quarter of 2020, we averaged nearly 10,000 contracts, or about 49,000 equivalent Bitcoin, up 106% compared to the fourth quarter of 2019. For the full year of 2020, we averaged just under 9,000 contracts, or about 44,000 equivalent Bitcoin, up 38% compared to 2019. So you can see the volume growth is robust. Yeah, it's not like treasuries or the Eurodollar futures or options yet, but we're getting there. It took a decade for Eurodollar futures to get to 100,000 contracts. So we're 10% of the way there, and 2 or 3 years in now. So the cool thing and the interesting thing is trades originating from outside the US and the futures, about half, 44%, originate outside the United States, which makes sense because cryptocurrencies are very heavily traded in Asia and also in the European time zones too. Options are much newer, and only about 11% of those originate outside. Accounts trading, this is amazing that futures that's been launched for basically 3 years has 7,200 active accounts trading. Given the size of Bitcoin, the volatility and the margins, that's phenomenal. And 190 options accounts are trading. So we brought a lot of new accounts into the cryptocurrency landscape, which is good. It's one of my favorite charts in the presentation. It shows the relative position of the market cap of some of the cryptocurrencies versus the market cap of other asset classes. So if you look at gold, it's a $10 trillion market. Apple Computer is $2 trillion in market cap. All the US dollars in circulation is about $2 trillion. Amazon's got a market cap of about $1.6 trillion. All the cryptocurrencies, we need to update this, are over $1 trillion now. And there's thousands of cryptocurrencies, Bitcoin, of course, being the biggest one. And Bitcoin's market cap in the slide is 644 billion. It's well over 700 billion now. So they're growing. I remember when I first made these slides, when we did the product launch seminar, for Bitcoin, all cryptocurrencies were barely 150 billion, and Bitcoin was, about 30–40% of that. So Bitcoin has a very large spot in the cryptocurrency landscape. And there's Jeff Bezos' net worth, in terms of not a market cap, but his net worth. And then Ethereum, which is the Ethereum blockchain, is what Ether is based off of. So that's $124 billion. So the two largest are Bitcoin and Ethereum, which would make sense to launch Ether futures because it's the second largest one. And there's another one that just, another slide, very simple. It shows the relative size of the cryptocurrencies, just the cryptocurrencies. It has the top 10. You can see Bitcoin and Ethereum or Ether are the largest ones. XRP, Polkadot, Cardano, Litecoin, so on and so forth. All right, and here's a chart that shows the growth of Bitcoin futures. You can see it's very, very steady growth, a couple spikes along the way when Bitcoin had some very, very volatile days, either up or down, but you could see the volume and open interest, and everything is just looking very, very nice. It's growing in a healthy way, very steady upgrowth. And we look for Ether futures to do the same. And oh, by the way, this is important, especially lately. This shows Bitcoin futures institutional interest and accounts that's expanding. So we have the number of accounts, which we talked about before, and then we have what's called large open interest holders. So that's kind of an indication of institutional size people, participants coming into the market. And you can see that's grown dramatically from basically nothing to about 105 large open interest holders. So that's significant. And large open interest holder is someone that holds 25 or greater than 25 contracts. So again, you've heard lately that the cryptocurrency landscape has been dominated by retail over the years, but now in the last 4 to 6 months, institutions are starting to get into the market, and that's important because you need retail, you need institution, you need market makers, and when you have the whole ecosystem set up, that's when you start to grow liquidity in a very nice way. And we're still early in the game. There's no ETF approved in the United States yet. There's no mutual funds that do any of this. There's a Grayscale Bitcoin Trust and Ethereum Trust. There's a couple of outfits in Europe and in Asia that can do that, but in the United States, the regulators they approve futures, but nothing else at this point. So the landscape's still not fully built out yet, and it will. We're early in the game, probably the 3rd or 4th inning maybe. When we launched these things, we were very early in the game, and we look to see this grow. So Bitcoin and Ether compared. You've heard the term, supply, that available supply versus total supply, and it will never go above 21 million. Well, the total supply that's been used so far is 18.6 million. The proof type, it's a proof of work type situation, and the decentralized, it uses peer-to-peer technology to operate with no authority, no central authority, no central banks control it. Issuing of Bitcoins is carried out collectively by the network. If you look at Ethereum, it's a decentralized platform that runs smart contracts. So, and these are applications that run exactly as programmed without possibility of downtime, censorship, fraud, or third-party interference. In the Ethereum protocol blockchain, there is a price for each operation. The general idea is, in order to have things transferred or executed by the network, you have to have consumer burn gas, which makes sense. Ether is a gas. If you know anything about chemistry or medicine, in the old days, they put you to sleep with ether. Well, you have to consume or burn gas to operate in the network. Well, the cryptocurrency, ether or gas, is called ether, and it's used to pay for computation time and for transaction fees. So decentralized or digital finance products, it depends on who you talk to. I use decentralized finance, DeFi. There's about 200 major ones going on now. The available supply is about 113.6 million ether. And the proof type is proof of stake, actually, not proof of work. You got to solve it with Bitcoin. You solve all these complicated transactions, and you're rewarded as a miner with Bitcoin. Proof of stake is where Ethereum or Ether is moving towards. There's going to be a little switch in some of the dynamics that'll make it more scalable, make it more secure, and it might switch to a proof of stake sometime in the future from proof of work. Algorithm is this eHash versus the SHA, which is a secure hashing algorithm, 256-bit, I think. I'm not a cryptologist. I don't profess to understand the underlying blockchain. I only have to know the futures contracts. So a little bit more there, just a second page that shows the differences between Bitcoin and Ethereum. Satoshi Nakamoto, it's a pseudonymous name. There is no Satoshi. That was a made-up name. He started this and printed a paper in 2008, and he did the first block, the Genesis block, as they call it. Ethereum was started by a very young, I think, East European or Russian gentleman named Vitalik Buterin, and that started in 2015. So both are very young. One has 6 years of operating history, the other about 12 years of operating history. So they require different computer chips to do it. They talk, scalability is different. The cryptocurrency, Ether versus Bitcoin, and block time. That's all technical stuff that you don't have to understand to trade futures successfully or even trade the underlying spot market. So how do they correlate? Bitcoin's been around a while, Ether's been around a while. How do they correlate? Well, in the early days of Ethereum, Ether, in 2016, 2017, and parts of 2018, there was no correlation at all. It was actually negative for some portions of time. And then it started to rise to about 0.6, 0.7, and now it's about 0.7, 0.8, got as high as 0.85, I believe. So there's a high correlation now, but they do have some degree of independence. And I think it just has to do with liquidity at this point, the type of investors that are getting in, the volatilities, and so on and so forth. But We'll see. The cryptocurrency landscape is very, very young, and that the correlation may go up, it may go down. We'll see. So why trade Ether futures here at CME Group? Same reason you trade any futures or trade Bitcoin futures, but it's efficient Ether exposure. It's very easy to express a view on a price, up or down, long or short, in the futures market. And we have a very rapidly growing cryptocurrency complex, as we would call it. We have Bitcoin, Bitcoin options, and now Ether. At some point, we'll probably launch other options or other cryptocurrencies, although we like to establish core liquidity in our markets as quickly as we can before we do anything else. Price discovery, it trades on a regulated exchange. You have transparent futures where all participants see the same prices and quotes. It's not like the over-the-counter foreign exchange market or whatever, or the swap market where bilateral transactions are seen only by those two people. There's not as much transparency. As we talked about, you have the robust underlying index, you have the Ether dollar reference rate, and the real-time index too. We'll see that in a little bit. And it's derived from the 4 or 5 major cryptocurrency exchanges. And you have capital efficiency, which is terrific. One of the nice things is margins. You only have to put up, well, with Ether, the margins were very high, and that's because the volatility was incredibly high. It approached 150, 160%, so the margins are quite high. They're about 45%, 50%, and that's pretty high. That's far higher than most other futures contracts. It's even higher than Bitcoin. But if volatility ever mutes a little bit, becomes more muted, it's very likely that the margins would go down. Of course, it has to do with contract notional value too, and the notional value, the Ether contract's gone from around 60,000 to 83,000 in just a couple of weeks. So a higher notional value is going to require a higher upfront margin, irrespective of volatility. But if you increase the volatility, then you're going to get an even greater increase in the margin. So margins is just one way of the CME Group clearinghouse to mitigate risk. It's to protect the clearinghouse, to protect the clearing firm, such as Phillip, and it's to protect the customers of Phillips as well. So here's the contract specs, very simple. We're not going to go over every detail on this slide, but it's 50 Ether. So we're trading at around 1,750 now. So we're roughly about an $82,000 notional value. The ticker symbol is ETH, which makes sense. The price quotation is in US dollars and cents per Ether. So it's trading at what, $1,750, $1,750 right now. The trading hours are the same as Bitcoin. We start up on Sunday afternoon at 5 o'clock and we go Chicago time till 4 o'clock on Friday afternoon. Central time, Chicago time. So we don't trade on Saturdays and we don't trade on Sundays until about 5 o'clock Chicago time, which is a slight disadvantage. The underlying crypto landscape trades literally 24/7. I open up I check my quotes sometimes on Saturdays and they're trading early Saturday morning or even Saturday night they're trading. It's pretty impressive. Minimum price fluctuation of the tick is a quarter per Ether, so it's quarter. It's just like the mini S&P 500, and it equals $12.50 per contract. Calendar spreads are about a fifth of that. Listed contracts, the number of contracts, there'll be 6 contract months, 6 consecutive months, and that will also include 2 December contracts. So we'll have the December of 2021 and December of 2022 also. Final settlement is the last trading day of the last Friday. Excuse me, they're financially settled on the last trading day, which is the last Friday of the month. And it terminates at 4 o'clock London time, which is about when they do that reference rate, the Ether dollar reference rate. Deliveries by cash settlement by reference to the final settlement price. So that's very important, to the final settlement price, which is equal to the dollar reference rate, Ether dollar reference rate on the last day of trading. All right, make sense? All right, so let's get into them a little bit. So the Ether US dollar reference rate, it aggregates the trade flow of the major Ether spot exchanges during a specific calculation window, and it gives you a once a day reference rate of the US dollar price of Ether. You can go to our website and you can see the transparency and the methodology and how easy it is to replicate the calculation. And it will be published between 4 and 4:30 London time every day. So this is like our London gold fixing, but for cryptocurrencies, if you want to make an analogy. Bitcoin RTI, or real-time index, is like the S&P 500 spot market. It's calculated every second. You can see it change. There's something called the S&P Fast Cash too, which every time there's a change in the S&P 500, it doesn't matter if there's a couple 100 per second, it's called Fast Cash, and it moves so fast you can hardly follow it. But the regular S&P cash market, I believe, is calculated discrete intervals, I think once every second. So the Ether US dollar real-time index, it aggregates the global demand of buying and selling Ether into an order book, and it reflects fair, instantaneous US dollar price of Ether. So it's published once per second every day, including weekends and holidays. So again, we have this robust reference rate, which we will settle at on the last Friday of the month. And we have the real-time indexes, which will be kind of like your cash market all throughout the day. And here's what it looks like on our website. This was just a screen capture from last night at around 10 o'clock at night, I believe. But you could see the reference rate, $1,732 per Ether, and the real-time index was 1729.53. So they're relatively close to each other, but they're going to be different because one trades throughout the day. One is a reference rate that's a snapshot of in the morning around 10 o'clock Chicago time. All right. So this is all on our website. You could probably get it on quote services like Bloomberg and things like that too. Here's how it looks like on CME Direct. CME Direct is CME's front end trading system. And I just put in there just the front 2 months of Ether and Bitcoin. So you could see the February and March 2021 Ether and the February and March 2021 Bitcoin. And you can see the bid offer spreads. You can see, for the first day of trading, all the market makers aren't in place yet. They're getting their systems and kinks worked out. It usually takes a couple of days for the market makers to get their systems good. And as liquidity grows, the bid offer will contract and go down. But you can see the Bitcoin futures for February and March, and for Ether futures. And you can see the volume when I took this screenshot yesterday. We were at about 186 contracts for Ether and around 11,700 for Bitcoin. So then that changed as the day went on, and as the next trading day starts, which is already done, that will change too. But I think day one Ether, we got open interest over 200, and we got volume around 200 or so. I didn't check the final numbers, but we were at about 200, before the close of the trading day. So we probably did more. All right, so that's how it looks on one of the front ends. And it's a pretty decent liquidity for day one. Really, we're very, very happy with that. And as things, remember now, we have a very high volatility instrument. Ether and Bitcoin have both basically more than doubled in the last few months. They've tripled in some cases. And when you get a tripling, when you get 150% volatility, you are not going to get 1 or 2 or 3 tick markets. As a market maker, as a trader, you know that when volatility gets excessive, the markets widen out. It's risk mitigation. It's not just the clearinghouse, but market makers do this too. No one's going to make a 1-tick market in a 150% volatility market. I've never seen it, and I've been in the markets for 32 years. When volatility goes out and expands, markets expand. Okay, a couple quick things comparing futures with the spot market. This is the big thing, wallet requirement. When you do a futures, you just need a futures account, no wallet necessary. You do Ether or Bitcoin on the spot market, you do need a wallet. You can link a wallet on one of the exchanges, some of the exchanges like Coinbase, with your bank account, but that's not exactly secure. Anyone that can get into your bank account might be able to, hack away your profits or whatever. But anyways, we don't want to discuss that. What matters is wallets are interesting. They're secure usually, but there's been a couple of issues with people that got large amounts of Bitcoin when it was basically worthless, 5-10 years ago, that now one gentleman in Europe threw his computer away. On that computer was a hard drive that contained his public and private keys for Bitcoin. The Bitcoin was now worth about $300 million, and he tried to get into the landfill to dig up his computer. Probably take him forever to find it, but they wouldn't allow him to do it. Then most recently, a gentleman on the West Coast, I think in San Francisco or in Stanford, was paid $7,005 Bitcoin many years ago when it was basically worthless. Well, he can't figure out the password to his wallet, and you get 10 chances. He's used 8 of them. He has 2 left. If he doesn't get it right in the next 2 choices, he's locked out forever, and the $220 million in Bitcoin disappears into the crypto wherever. the crypto landscape. So be careful. With a futures account, this doesn't happen. With futures, this doesn't happen. Capital efficiencies, yes, the margins are very high on Bitcoin and Ether. I admit that, but there's that's a result of huge amounts of risk. You don't have that same when you buy, when I buy Bitcoin or Ether on an exchange, and I don't do it via the futures market, you have to put up the full amount of money. Regulated market, futures are regulated. The Ether or the spot market, somewhat regulated. We'll see if more regulation comes into the markets as time goes on. Tax efficiencies, you get 60-40 tax treatment for some investors. Usually a trader, an individual active trader would get tax efficiencies on profits traded in the futures market. You wouldn't get that on the spot market. Clearinghouse risk mitigation, yes. On spot market, no. The underlying business experience of the CME Group and the Board of Trade combined is 180 years. Ether on the spot market's been around for about 10 to 11, 12 years for Bitcoin, and much less than that for Ether. Ability to go short, very easy in the futures market, not as easy in the spot market. Okay, so here's some price action. Take a little water here. This is Ether going back 6 months, ending yesterday. You can see the price action since December has been incredible. It's gone basically almost tripled. Now this is a 5-year chart, excuse the title up at front, price action 5 years ending February 8th, and that's 6 months. This goes all the way back to 2016, and you can see that massive double top at around 1400, and we broke above that a couple days ago. So at the time that this chart was made, Ether was trading at 1,764. Given that the contract calls for 50 Ether, it's 50 times 1764. The notional value of the contract, the size, if you wanted to pay cash for the whole 50 Ether, would be 88,250 as of yesterday. So it's growing. It was about 60,000 when I started working on this seminar, and it's up to 88,000 now. So that's an incredible growth. And of course, Bitcoin, 5 years ending yesterday. You can see massive double top at 20,000. And then we broke above it decisively and doubled from 20,000. And we're currently at around 46,000. So the crypto landscape's been pretty impressive. Some of the other cryptos out there are doing very, very well too. I know several people that have participated in the crypto trading landscape, and well, they're happy if they're long. I don't know anyone that goes short this stuff. That's crazy at this point. But in the futures market, obviously, there are people that are short via spreads or doing some long short combination with options. But you can see their major double top at 20,000, and now we're at 46,000. So again, the predictions are as numerous as there are people on Earth. I've heard predictions that Bitcoin will go to 80,000. I've heard predictions that it'll go to 300,000. I've heard predictions that it'll go to 1 million because of the limited supply. Very interesting. The economics has not been invalidated though. Usually when prices get too high, sellers come out of the woodwork. So be careful when you listen to predictions. We don't know where they're going. The Merc doesn't know. I don't know. But we have to talk about some of these outlandish predictions. But hey, when I heard that some guy, a very famous hedge fund operator, thought Bitcoin was going to go to 40,000, I thought, that's a little outlandish. Well, we got there about 2 years after his prediction. How's Ether done versus other assets? Very well. You can see all the other assets there: Google, Amazon, S&P 500, and stuff like that. And it's the cryptocurrencies have left other asset classes in the dust. In 2020, it was no contest. As a matter of fact, cryptocurrencies over the last 10 years have been the most successful asset class in terms of performance. All right, so risk mitigation, clearing, we got to talk a little about, let me just see something here. Yeah, we have this incredible volatility. Last time I looked, it was 155% in Ether. So in a sentence, CME Clearing is well equipped to handle the risk. It's well equipped to handle high volatility. For over 180 years, we've been assessing and mitigating the risk associated with financial markets. So they're good at it. Not saying that they're perfect, but they're good at it. Crash of 1987, Russian debt crisis, Lehman Brothers failure, Bear Stearns failure, the 2008 financial crisis, Brexit, the Swiss National Bank problem back in 2013, where the Swiss franc had a price change of 30% in about 17 seconds due to an announcement by the Swiss National Bank. All these times, the CME has been there with the highest degree of risk mitigation. We have the power. CME has the power to assess additional margin, change margins, and do so on a moment's notice. The span margining system is used by dozens of exchanges throughout the world. The span margining system is the primary options margining system. You use it for futures too. It stands for Standard Portfolio Analysis of Risk, SPAN, and it's undergoing a software upgrade and an upgrade, and should be parts of it released this year in 2021. Not sure on the date though. Moreover, the Globex trade matching system has built-in safeguards such as velocity and stop logic. They're activated during times of market turbulence. Sometimes you get massive vacuums, big price jumps, and big gaps. So these, stop logic and velocity logic help mitigate these things during severe turbulence. The exchange also has price limits, and they change, they're dynamic, and those too can help mitigate extreme price volatility risks that the markets exhibit sometimes, like they have lately. Ether investors will also enjoy margin offsets with Bitcoin futures. So if you want to spread Ether versus Bitcoin, you won't have to pay the full gross margin, you'll get an offset, okay? All right, so here's the volatility. I want to make sure we have time for questions. We're doing fine here. Here's the historical volatility. Since we didn't have options on it, there's no implied volatility. So these are historical volatilities, and it's pretty amazing. Look at the volatility. On the low side is about 45–50%. On the high side, it's about 150–160%. So you can see we have volatility. It's very cyclical, like it is in just about every asset class. But look at the highs there, 150%. If you look at treasuries, you look at currencies, you look at the stock market, you never get to 150%. I have never seen intraday basis crash of 87. I saw volatility get to about 100, 110%, 150%, but that was intraday, and that was one time. Even the financial crisis, we didn't have intraday volatility get into triple digits yet. Ether does it regularly. So be careful. Bitcoin too, very volatile. As a result, that's why the margins are so high. If I can put it in a picture, this is it. But if I can make it a more detailed picture, this is it. So what we're looking at now is Ether volatility and the price movement. Well, now, by the way, this is the problem when you're doing a cryptocurrency presentation and you're making your PowerPoint slides. Ether was so volatile and it had such a big uprise that we're not at 1320 anymore. We're at 1750. So these numbers are off a little bit, but they'll give you an idea of where and how much Ether can move on a given day. So what I took is the data points from that chart before. All right, we'll go back. This chart, all these data points, instead of plotting them on a chart like this, I did percentile rankings, and I did the highest in the last 3 years. It's from 2018 to 2021. I did the high, the 90th percentile, 75th, 50th, 25th, 10th, and the lowest that's traded in the last 3 years. So the highest volatility for Ether has been 157%. That's basically the 99.9 percentile or 100th percentile. 90th percentile was 117. 75th percentile was 100, so on down the line. The lowest was 42%. That's still a huge volatility, 42%. So you can use math to convert these things by dividing by 16, square root of 252 trading days. And there are some people, and anyone in the audience want to weigh in, that believe that the daily volatility, since the spot market trades for basically 365 days a year, except some holidays maybe, that you should do the square root of 365 instead of the square root of 252 or 262 to convert to a daily volatility. Any mathematicians out there, you can weigh in, or ask statisticians. But we convert to a daily volatility at 157% volatility. Ether is going to move 9.8% every day. Well, at its current price, that's about $170. At 117% volatility, the 90th percentile, meaning 90% of the time volatility is less, you'll be moving 7% a day. Even if the low, 42% volatility, we're going to move 2.6% a day, which is more than the US stock market usually moves in a day. So I calculated a 1, a 2, and a 3 standard deviation move. And you know, 1 standard deviation move is usually 2 times out of 3 will be within 1 standard deviation. A 2 standard deviation move is 95% of the time you'll be within 2 standard deviations. And a 3 standard deviation move is 99.7% of the time you'll be within 3 standard deviations, and only 0.3% of the time will you be outside that range. So basically, 1 or 2 standard deviation move at the current volatilities are about 130 to 260 points a day. So just be aware that it's going to be a wild ride if you trade cryptocurrencies. But people know this. People know about the volatility. This just quantifies it a little bit more. Okay. The next chart I want to put up is the primary and secondary uses and some additional uses for Bitcoin and Ether investor ecosystem and its potential uses. Whether you're a pension fund, a hedge fund, a prop firm, retail trader, Bitcoin miner, or a corporate user, there's a use for you, whether it be diversifying into other assets as a cryptocurrencies, long short strategies. Prop firms do market making, active traders do long short strategies, options traders do long short and options combinations. Miners are probably doing hedging strategies or anticipatory hedges, and corporations are using them for treasury management. We'll talk about that in a little bit. There's digital finance projects that can use Ether futures, lending and borrowing platforms that need to hedge, and cash management. There are some people that are accepting Bitcoin now. So remember, this would be an accounts receivable, and it's a very, very volatile accounts receivable. You know, if you accept, you know, Japanese yen as a currency, it's not as volatile for some treasury management purposes. It has, you know, currencies, they're volatile, but they're nowhere near as volatile as Ether or Bitcoin. So imagine needing to hedge that exposure, and you could see another use for Ether and Bitcoin futures. All right, quick trade illustration. Again, I made this on February 4th. We've gone up 300 points almost just in a couple of days over the weekend. So a trader buys 1 February ETH future, 1 February Ether futures contract at 1480. All right, notional value of 1480 is around $70,000 or something like that, $74,000. The notional value at 1480 is 1480 times 50, 74,000. Let's say a day later, the futures price is at 1500. So trader offsets, sells 1 February ETH future. The notional value at 1500 is 1500 times 50 or 75,000. Well, you can calculate your P&L by just taking the difference between the two notional values, or you can do it with points. The profit and loss, well, you made 20 points, 1480 to 1500 times 50 Ether per contract. So 20 points times $50, $1,000. So there's several ways to calculate your P&L. Margin required, 45 to 50%. It's 45% a maintenance margin. Your initial margin is usually 10% above that. So that would take you to 50%. So you'd have to put up about $37,000 in this example, okay? Now, can hedgers use this? Yes. Let's say you're an Ethereum miner, all right? Ethereum is the underlying blockchain for Ether. You're paid in the gas, which is Ether. It's amazing how they came up with these names, but Vitalik Buterin, the one that started Ethereum, supposedly one of the brightest guys in the room, and very, very young, in his mid-20s, I believe, started this whole Ethereum blockchain movement. All right, so you're a miner. You've assembled a nice portfolio of Ether. With a large advance in 2021, the miner would like to lock in some gains and diversify his portfolio. So let's say the miner holds 2,000 Ether. They wish to hedge half their holding. So 1,000 Ether needs to be hedged. Each Ether futures represents 50 Ether. So thus, 20 contracts would be required. The miner would be hedging against the decline in Ether, so he would actually sell 20 contracts, and this is known as a short hedge. When you're selling to protect against an adverse downside price move, it's a short hedge in this case. So selling or hedging would lock in the current price should Ether decline. The profits on the hedge would offset the losses on his Ether portfolio. So, but if Ether should advance, miners could remove the hedge and reestablish at some point in the future. And that's a key thing. When you're going to use futures contracts as hedges, you have to manage the hedge. So if Ether prices go down, you would at some point lift your hedge and take your profits on the hedge, and that would offset the losses in your underlying portfolio. If Ether would advance, you don't want all your profits on your Ether portfolio to be eaten away by your short hedge, so you would lift that hedge and reestablish it at some point in the future. All right, a little bit more tricky to hedge, but those that do hedging understand the need to do this. All right, so we're gonna keep going here. We've got a few more minutes, and then we'll take questions. Ecosystem is growing. The all-time high in Bitcoin and gold. The all-time high in Bitcoin and gold correlation was seen at the same time that MicroStrategy, the world's largest business intel firm, bought $250 million worth of Bitcoin. That should be a little b, not capital B, making the asset its primary treasury reserve. This is seen as a major sign of institutional interest. Well, Michael Saylor, I believe, is the gentleman's name that runs MicroStrategy. It's the CEO. And he bought a whole bunch of Bitcoin back earlier last year. What a trade. He's tripled his money, easily tripled his money. And it's interesting that he would take so much of his treasury reserves and put it into Bitcoin. But he's looking really, really bright now. I'm sure the board of directors is, not sleeping as well as they usually do, but they've made so much money that even if Bitcoin came down 20, 30, 40, 50%, he'd still have a massive gain. Also, Fidelity did a survey for money managers, and it shows 1/3 of institutional investors owning crypto assets. So this is how you grow an ecosystem. It starts, we started with futures, we started with spot Bitcoin and cash Bitcoin and things like that. And then market makers got into it, then hedge funds got into it, and now large institutions like pension funds or corporations are getting into it. And this is the thing, this is, what's propelled it from 20,000 to 47,000. You have very large players coming in. And just yesterday, it was revealed that Elon Musk decided to get into cryptocurrencies like Bitcoin, although he did late last year. So people think that he just bought into it in the last couple of days, pushing the price higher. His filings with the SEC show he bought it several months ago. So that's something to be aware of, and this interest is very likely to grow. There's dozens and dozens of corporations now that have used some of their treasury reserves to invest in Bitcoin. Same thing with pension funds, and well, we'll see a little bit more of this later. Yes. Corporates that have invested in Ethereum blockchain: Google, Comcast, UBS, Samsung, Amazon, Fidelity, MetLife, BNP Paribas. Also, there's reports that, some of the Ivy League schools in the United States, Harvard, Yale, Brown, they've been discreetly buying Bitcoin. That would not surprise me at all. If you look at Harvard and MIT and Stanford, those types of endowments, they've gotten away from the traditional paradigm of 60% stocks and 40% bonds. What they've done is they have a lot of alternative investments, a lot of swaps, a lot of commodities, and investing in an alternative asset like cryptocurrencies does not surprise me at all. So the CME Institute, we'll start to wrap up here. The CME Institute, it's a great place to learn more about futures and options, whether it be Ether, Bitcoin, or any other futures market. We have a lot of free online classes, a lot of resource. We have a trading simulator, which if you're going to trade Bitcoin and you haven't traded futures before, be careful. Spend some time on a simulator, just like airline pilots do. They have to spend thousands of hours behind a simulator before they are able to get in an actual plane and fly it. I suggest you do the same thing, maybe not thousands of hours, but spend some substantial time on our trading simulator and get the hang of it. It calculates realized gains, realized losses, calculates your margins, and gives you fake $100,000 to trade with. So go to cmegroup.com/education, and you can go to trading simulator, and you'll see it works very good. It's a very realistic way of learning how to trade if you don't have that background. Okay. We have some on-screen liquidity and market maker programs and block providers. You can see that on the page here. So if those that want to do large blocks, you can call one of these market makers up, or Phillips can facilitate it for you. The liquidity providers and the market makers, you can see there too. So I want to thank you all for listening. We're going to take some questions now. So Thank you for listening. And by the way, just a personal note, I've been working with Phillips for a lot of years. I remember the first webinar I did in Singapore many, many years ago. And now they're a major user of our products and their customers. And I want to just thank you for your business and thank you for your time and your partnership over the years.
All right, thank you so much, David, for walking us through the landscape and the potential opportunities in the cryptocurrency area. All right, we have some questions for the rest of you who don't have the question yet. Take this time to think about what was covered, and you can type the questions into the question box. You can find the question box on your control panel. It's somewhere at the bottom. You just click on questions and type your questions in there. This is strictly conducted on an educational basis. So that's why we have the Director for Education from CME Group walking us through the cryptocurrency landscape. So take this time to ask questions that you may have and better understand cryptocurrency. Looks like it's here to stay. First question we have on hand is from Mr. Sunil. The question is, does CME have options on Bitcoin and Ethereum or are planning to launch?
Very good question. Yes, we do have options on Bitcoin. We launched those in early 2020, so they've been around about a year. We do not have options on Ether yet. What we like to do is establish core liquidity. We need some liquidity. You can't, it'd be very tough to launch options at the same time you launch futures. That's a recipe for a more difficult launch, and you want to make sure your market makers are ready. You want to make sure all the plumbing and all the technology is in place before, and liquidity, you want some liquidity, you want some open interest, and you want a certain amount of average daily volume before you launch options. So down the road, yes, we got the same question when we launched Bitcoin. When are we going to do options? Well, a year later, a year and a half later, we had Bitcoin options. So it worked out. Just you got to be patient. You got to wait for liquidity to develop. Again, it's part of the ecosystem. You don't build an ecosystem in a couple of months or even a couple of years. It takes several years. Okay.
All right, next question is from Lilia. Lilia is asking, what other cryptos does CME plan to add? Interesting question, Dave.
At this point, we have nothing on the drawing board that we can reveal publicly. I'm sure that if Ether turns out to be as successful as Bitcoin, that we will launch, some of the larger cryptocurrencies, the ones that are really, really active. And that, we also go by what our user base says. And a lot of our customers say, hey, launch Ether, launch Ether, launch Ether. So if we hear a large outcry for other cryptocurrencies, we would certainly, consider that.
Looks like we have David on the ropes right now. So perfect time to tip him over. David, do you have a slide on the industry, the percentage makeup in the cryptocurrency industry? Did you have a slide on that, like how big Ether was, how big Bitcoin is, and the rest of the cryptocurrency? I think you had some slide on that.
Yeah. Could you guys see the slides?
Yeah.
Okay, there it is.
All right. So David mentioned that it's that likely that some of the major cryptocurrencies will be converted, or there'll be a futures contract added for the major cryptocurrencies. So this should give you an idea on the market landscape, how big a particular cryptocurrency is. All right. So thank you for sharing this, David. Any other questions from the audience?
Yeah, the people are asking if they can have the slides. You at Phillips have permission to either record this or, send my PowerPoint presentation to them in PDF form. That's fine. But you notice on this slide, the big drop off, Bitcoin 655 billion, Ethereum is 129 billion, and then we drop all the way down to Tether, 24.2 billion, XRP 12 billion. Remember now, the success of a futures contract is usually related to the size of the underlying cash market. If you look at the most liquid futures contracts, they have very, very large underlying cash markets. So it would be harder to have a futures contract on Cardano or XRP. I'm not saying that it wouldn't be successful, but it would be harder to develop liquidity because there's just a lot less market cap in those cryptocurrencies.
All right, fair point, fair point. That's something for all of us to take note of. All right, so for the rest of the audience, if you have any other questions, please fire away into the question box. In the meantime, David, would you be able to share a little bit more on the Ether launch and what do the traders think about the launch of the contract?
I haven't. I would be doing that later on today, but we just launched yesterday, so I haven't talked to Tim McCourt yet, who runs the equity department, which the crypto complex falls under his. But I think they're happy. You know, we had trades, we had good trades, we had good markets all throughout the day. You know, they were 1 by 1, 2 by 2. Again, your day one with something with 150% volatility, I think that was actually an outstanding day given the volatility. Like I said, you're not going to have 1 or 2 or 3 or even 5 tick markets when you have 150% volatility. And market makers are, you know, when you're just starting a new product with 150% volatility, your markets are going to be a little wider. So the markets were probably a little wider than you would expect, but at the same time, they traded pretty darn good. You know, over 200 contracts, and the open interest is over 200. So that's a very good day one. There are products that exchanges have launched over history. I've been in this business 3 decades, where day one they don't, you know, trade 5 contracts or 10 contracts or 0 contracts. You know, we've launched contracts that didn't trade day one and they never traded. So this is, given the 150% volatility, given the margins, given it's day one, that's a successful launch in my eyes any day. We'll get trader input as the days go on. And, you know, you'll read about things and you'll hear about things because the marketplace is very good at disseminating information.
All right, David. A few years ago, when we had the initial run for Bitcoin, and I think there were a lot more skeptics in the market as opposed to the market right now. What's your thought on, I mean, with CME launching the Bitcoin futures and the Ether futures, is cryptocurrency here to stay? I mean, I think that's a question that many new traders are probably thinking about.
That's a prediction that's hard to make. Are cryptocurrencies here to stay? My personal opinion, not that of the CME Group, I'd say yes. Just given some of the heavyweight people that have come in, some of the major corporations, some of the major pension funds, you know, Elon Musk, given the price of it, given how important the underlying blockchain technology is starting to become, and, you know, people, you know, what gets lost when Bitcoin goes from 20 to 46,000, what gets lost under there is there's an underlying blockchain technology here that a lot of people are starting to use. And they like the network. They like the fact that it's scalable. They like the fact that it's secure. And you know, same thing with Ethereum. You have a network that's very decentralized. It's very scalable. It's becoming more and more secure with Ethereum 2.0, which is going to be launched any day now if it hasn't already. And the proof of work or the proof of stake concept, all that bodes very, very well for digital finance and for decentralized finance. And I think it's here to stay. That's a personal opinion, though. I think it's here to stay. It will be volatile. There will be times where, you know, people will write Bitcoin off. Maybe it drops 10%, 20% in a week or something like that. And people will say, oh, it's over or something like that. Well, you know what? We went from 20,000 back down to 4,000 in 2020. And now look where we're at. So it's new. It's something that's been around, you know, 12 years. And I think it's here to stay.
All right, David, we don't have any questions at the moment, but can I just request, there's this segment in the webinar where you share the differences between the futures as well versus getting a Bitcoin outright. Do you want to touch on that so we can wrap up this webinar and give the audience a wrap up of what we've covered today?
Sure. Yeah, I have the slide up here. Just this is for Bitcoin too, the same thing. It's all cryptocurrencies versus futures. The most important thing, I think, given what's happened, I read a statistic that 20% of all Bitcoin is locked up in wallets that people lost their passwords or can't remember their passwords. So the nice thing is when you do futures contracts, all you have to have is a futures account at Phillips, and you can trade them. No wallet. All you need is a futures account. You'll never have to guess your password, or if you lose your password, you call Phillips, they'll reset it for you, so on and so forth. That's a good thing. The capital efficiencies, even though margins are very high, they're still nowhere near 100%. It's regulated. In the United States, you have tax efficiencies as a US trader, but as someone domiciled in Singapore, you probably would not have tax efficiencies. You have our clearinghouse. And you got the ability to go short, which is much easier, but I would be very careful going short any of these things unless it was part of an options combination or a spread. So I think the advantages are pretty obvious.
All right, thank you so much, David, and Rachel as well for joining us for this live webinar. As David has shared earlier, we will have a copy of his slides, and this webinar is recorded, so we'll share a link to the recording so you can revise what was covered today.
Thank you very much.
All right, thank you, David. Thank you for being a wonderful audience. I understand that you might not have questions at the moment. Please type them into our survey form right at the end of this webinar if you have any other questions, and we will be very happy to address them offline. All right, so take care, be safe, and have a good night.